Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 24 hours it's been a rather challenging display of bullish activity as the market rebounds off the level of 72.65 and now tackles the top side of the range. After clearing 73.40, has put a bit of a question mark on can the bulls continue? Well, after the afternoon retreat, does question whether the bearish sentiment is coming back into the market again. We do need to see a break of 73.15 to reinstate the downside after the break of 73.40 earlier. If so, then 73.15 should trigger a call back towards the region of 72.25 to 65. Still, I'm not giving up faith on the top side at the moment in terms of the bearish case, because as you can see, the rise since the first peak here, early November, and the market also been declining, it continues to hold bearish divergence. A little bit weaker due to the overnight rally, but nevertheless, still the call is the seeing divergence. And let's see if the market can overthrow the bullish trend that's just come into play here and look back. But we really need to see a break of 73.15 to reinstate the downside. Well, at present, the market bulls are back to challenge that 119 level. And after posting a brief high of 09, the market's dropped back 10 points. As you can see from right through, if we just take this off here, all the way through, is that the fact is that every time we get to this top side of the range, the market rejects that 119 level. And the other factor is the US dollar, which measures the greenback strength against a basket of 6 major currencies and weighted to the euro at 57.6, still holds above that 92 handle, not broken yet. So that gives some faith. The fact is that the bulls are likely to fail when it comes to the top side of the range, that is around 119. Let's see if the market can drop back to the recent view of 117.80. The bulls a little bit questioning as the bounce, or the bounce that is, off the recent inverted hammer, posting a bullish outside range day, and now a long-legged doji. Very mixed signals after showing that the bull camp is still around that 103. Nevertheless, a weak bullish signal is in play between the RSI and the MACD. So I do anticipate a challenge to that top side of this downtrend, which is seen around 105, figure 25. Now, seeing a short-term uptrend established, and as the fact is, as long as we maintain above 133, figure 15, is that the market's going to be a little bit mixed. And the fact is, looking into tomorrow, we do have the FOMC minutes, and also we do have Thanksgiving in the US, so it could be a little bit quiet and maybe consolidate around this region. I hold a neutral view due to the fact that we recently broke up above 132.95, and I'd rather wait for better opportunity to emerge for the pound. Looking at sterling yen, market's broken above but still hesitant towards that 140.30 level. I do believe the market may struggle here and therefore see a drop back beneath this level, but let's see if we can get the confirmation before the call. Gold is falling further since taking out the level of 1,850 and all eyes on that 1,745 to 65 range or support that I view back from when it was established on the break of this bull trend around June. Let's see if the market can stage a rebound of this level. We are trending to a bear case. We are oversold. So there's about 50 points left to the downside, and reassess. The trend is still holding for West Texas crude as the market now holds to a bull trend around $43 a barrel. The market is looking for a further test up after clearing the top side of that range earlier overnight, which was around 43.80. And now from there, let's see if the market can have the strength to rally on to 46 to $50 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look after the intraday report. I hope you enjoy the rest of the day.